PM takes aim at the Bank of Thailand over interest rates despite Thailand's lower borrowing costs. Prime Minister Srettha Thavisin takes a swipe at the Bank of Thailand's 2.5% interest rate, citing potential harm to economic recovery. As Thailand begins to confront challenges, including sky-high household debt, Srettha calls for a borrowing rate aligned with economic trends. Prime Minister Srettha Thavisin struck a discordant note on Wednesday as he appeared to take aim at the Bank of Thailand over its interest rate policy. The PM was presenting the government's 2024 budget to Parliament. It comes as the economy begins a new year with projected 3.2% growth while final figures for 2023 are due in February. This is expected to show disappointing growth of 2.5%. At the same time, the country's cost of borrowing at base rate is significantly lower than in the United States and regional peers. Prime Minister Srettha Thavisin arrived in Parliament on Wednesday and addressed the House of Representatives. The PM appeared to take a swipe at the Bank of Thailand and called for an interest rate policy more in line with the current economic trends. The budget presented for 2024 revealed a higher deficit, up by 100 billion. As the Bank of Thailand prepares for its first rate-setting meeting of the year on February 7, Prime Minister Srettha Thavisin has again been sending signals. On Wednesday, he emphasized the importance of considering the economic risks the country faces, particularly the fragility of its recovery. At length, most analysts including the Thai Chamber of Commerce are now predicting only 3.2% growth for the year. He was speaking to Parliament at the onset of the budget debate. PM warns the current 2.5% base borrowing rate is too high. He called for a rate in line with the economic trends as he addressed the House of Representatives. Prime Minister Srettha expressed concern at the decade-high borrowing costs, currently standing at 2.5%. The PM warned it might adversely impact the nation's economic revival and the well-being of its citizens. The monetary policy going forward should be in line with the economic trend, tighter financial conditions, and an additional boost from government policies, Mr. Srettha declared. He urged the Bank of Thailand to be cautious in its decision-making process. Nonetheless, the interest rate in Thailand at 2.5% is currently less than half the level of U.S. interest rates. Indeed, there is pressure on the central bank to raise it. At the same time, the Monetary Policy Committee is expected to keep borrowing costs steady. Bench rate in Thailand less than half the U.S. rate, which is at 5.5 to 5.75%, although there are now clear signs this rate will fall in the course of 2024. Thailand's benchmark borrowing rate is not only well below the U.S. level but also that of regional players. The U.S. rate currently runs at 5.5 to 5.75%. Significantly, the base interest rate in Malaysia is 3% while in Indonesia it is 6%. This puts pressure on banks trying to attract deposits. It comes as the backdrop to a year which will see a tightening of credit conditions for new loans in Thailand. The central bank is implementing strict new lending criteria. Thai economy is stable but is being strangled by personal debt. Fixing it could see pain before any gain. Incoherent government economic policy clashes with Bank of Thailand's efforts to rein in debt. In short, this is part of its plan to improve loan quality and address Thailand's chronic household debt issue. It is currently running at 90% of GDP. There may be some good news for the PM, however, as U.S. interest rates are poised to fall back in 2024. Inflation in the world's largest economy is now thought to be under control. Srettha suggests weaker than anticipated economic growth justifies some slack in interest rate policy. The Bank of Thailand, at its last meeting, opted to maintain its benchmark interest rate at 2.5%. However, the Premier highlighted that the central bank had raised its benchmark repurchase rate by a total of 200 basis points over a 13-month tightening campaign based on the assumption of a good economic recovery. Despite these efforts, the persistently low inflation rate, projected to fall for a third consecutive month in December, serves as a worrisome reflection of a slowing domestic economy, according to Mr. Srettha. The Premier acknowledged the challenges facing Southeast Asia's second-largest economy. This includes the impact of El Niño, high household debt, slowing global trade and geopolitical tensions. Srettha in Parliament pushes for an expansionary economic policy with economic growth driven by the government. Plans to spend more with a higher deficit. In light of these challenges, he stressed the need for a loosening of monetary policy. He accepted this might include tighter financial conditions. At the same time, he highlighted the essential role of government policies in driving the economy. The 3.48 trillion budget for the 2024 fiscal year to Sep 30 will entail a deficit of 693 billion, an increase of 100 billion from the deficit projected by the previous government in a preliminary draft, Mr. Sretha revealed, underlining that incurring a budget deficit will be instrumental in supporting the economy during these turbulent times. Steady-as-she-goes growth and economic stability driven by a growth in U.S. exports is all good news. Despite concerns from some central bankers and economists, the Pheu Thai Party has been advocating an expansionary economic program. PM still hopes that digital wallet can proceed, but his speech showed he has tempered his expectations from Pheu Thai's initial insistence on 5% growth. It still calls for a bold 500 billion digital cash handout, aiming to stimulate domestic economic activity. The proposed initiative has sparked controversy, with varying opinions on its desirability in view of the economic challenges. Sretha outlines digital wallet as his government begins to flounder with a faltering economy and confusion. Digital wallet plan could break up the government before it launches, says top Thai political pundit. On Wednesday, Sretha accepted that the plan had been deferred. It was first planned to be rolled out in February/March 2024. At this time, legal clarification is sought on whether a government loan can be used to fund the stimulus measure. Target for 2024 is for growth between 2.7% and 3.7%. In the meantime, the Premier emphasized other initiatives such as boosting foreign tourism efforts to drive the economy. Significantly, political soothsayers warn that pushing the initiative could trigger a political crisis for Sretha and his government. The PM has previously expressed his ambition to accelerate annual growth to 5% during his term. On Wednesday, he tempered these expectations. He disclosed that gross domestic product, GDP, expansion this year is expected to range between 2.7% and 3.7%. This forecast represents a marginal improvement from the estimated 2.5% growth in 2023. Bank of Thailand's Monetary Policy Committee on February 7 expected to keep interest rate levels unchanged as it tries to navigate a fragile recovery. The Bank of Thailand's Monetary Policy Committee meeting decision on February 7 on the policy rate is now in focus. It will be pivotal in shaping the economic landscape for the year ahead. The Premier's call for a cautious approach underscores the delicate nature of the country's recovery. In short, Thailand's overborrowed private sector is already reeling. The fact that interest rates are less than half the world's norm illustrates this significant weakness. The PM emphasized the need for a well-balanced and nuanced monetary policy to navigate the challenges faced by Thailand's economy. As the government is set to report the full year 2023 GDP on February 19, all eyes will be on the central bank's decision. Afterwards, the effectiveness of the proposed stimulus measures in mitigating the economic headwinds will be tested. Bank's core mission is to preserve stability. The coming weeks will reveal the extent to which the Bank of Thailand heeds the Prime Minister's advice. Basically, the bank is independent. It has a mission to keep inflation in check while looking towards growth to preserve financial stability. Bank of Thailand to tackle household debt in new plan from 2024 which will see higher standards. Government's efforts to solve household debt take shape. 500 billion to be injected into the economy. We can expect it to keep the status quo for now, especially in view of its planned credit squeeze which began on January 1 and ramps up further in April.